Hey, it's Nick here, and you're on the Transparent FX Academy. I'm a top author on TradingView, and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so it's definitely time to make an update from our previous analysis on gold. Now the market has created exactly the move that we wanted to see from our previous analysis. So it's time to make an update and see where we can be looking for the next opportunity on gold, which is exactly what we will be doing in today's video. Now, as usual, I will be keeping this analysis as educational as possible. So first, we will be speaking about the technical aspect of this market. What we will then do is go and check out what the biggest banks and institutions are doing in this market. So basically on this commodity, checking the commitment of traders. Now, this is what the non-commercials in the market are doing. So the biggest institutions that are in the market to actually make money, okay, to profit. And by being able to follow their orders, we do have an advantage over our competition in the market, because we can trade alongside with these big banks and institutions, and that is what can give us an edge over our competition in the market. And by the end of the video, we will know exactly how we can be looking to capitalize on the next possible move of gold. Now let's start here from the monthly time frame. Now on the monthly, what do we have? Now on the monthly time frame, we have a market which has just created a nice impulse to the upside, followed by this correction. Now, after an impulse and a correction, what you expect is for the market to start the continuation to the upside, which is in fact exactly what the market has now just started. But generally speaking, if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if you take your Fibonacci from the low to the high of the impulse, you expect the market to retrace minimum to the 0.382. And if we do it on this actual impulse, so from this low to this high, what we can see is that we had a retracement exactly to the 50% of the Fibonacci taken on this monthly impulse, from which we do expect the market to provide the continuation to the upside, which is exactly what the market is currently doing, because the 50% is a quite strong support zone that, if the market tests, you do expect the market to reject to the upside, which is in fact exactly what the market is currently doing. Here in the weekly time frame, what we can see is that the market has just rejected a quite strong supply zone. In fact, what we can see is that the market has just tested the very strong supply that we had at this area. In fact, from here, the market had started all this move to the downside, and currently we are again testing the exact same supply zone, from which we definitely do expect the market to provide a rejection to the downside, which is in fact exactly what the market is doing. So also here on the weekly time frame, even though overall we would like to see the market create a continuation to the upside, we have identified a very important thing. We have identified that the market has just rejected the supply that we wanted to see the market reject from the first place. That is exactly what we had identified in our previous analysis. Now, there is one other quite important thing that we must acknowledge from a weekly perspective. Here in the weekly, we must realize that this candle here is the candle which you expect the next candle to fill in the wick. Now, every time that you see a candle like this, so a candle that has a green body and a long wick, in which the wick is at least 50% of the size of the body. If you have a situation like this, where you basically have the market that prints a candle like this, what you expect is for the next candle after this one to fill in this wick. Now, in our specific case, we still don't have any kind of confirmations that the market will actually close with this shape, because we still have 1 day and 8 hours to go before this candle will actually close. So we don't have any confirmations that this will actually be the size and the shape of this weekly candle. But if this will be the shape, then what we expect next week is for the market to fill in this wick and create a continuation to the upside and possibly break above the supply that we have here from a weekly perspective. So on the weekly, situation is very clear, and we have just identified two very important things. Number one, we have the supply zone and the market has rejected it to the downside. But the second thing that we have identified is that if the market will actually close with this shape on the weekly time frame, we can expect next week to be bullish. And since on the monthly, as we have already identified, we have an impulse and a correction, what we can expect is for the market to provide the continuation to the upside that we already expected from a monthly perspective. Going down on the daily time frame, what do we see? Now on the daily, we had spoken about gold quite a few times in the past. I spoke about gold when the market was here, and I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside, and that is exactly what the market did. Then I spoke about gold again after this head and shoulders when the market was here, and I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside, and again, that is exactly what the market did. Then I spoke about gold after the creation of this W formation. I made a full breakdown of gold when the market was here, explaining all the reasons for which from here we wanted to see the market create this move to the downside. And again, that is exactly what the market did. Then we had the creation of this W formation, and I made another breakdown when the market was here, explaining all the reasons for which we wanted to see from here the market create a move to the downside. And again, that is exactly what the market did. And with the very last analysis that I performed on gold, I explained all the reasons for which after this overextended W formation, when the market was here exactly when it was at this high, I made a full breakdown explaining all the reasons for which from this high, we expected the market to provide this move to the downside. And now that is exactly what the market did. And by the way, I will link in description all this previous analysis. So you find all this previous analysis linked in description, so you can go and check it out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. But at the moment, what do we have and how we can be looking to capitalize on the next move for gold? Now, before I show you what we have on the daily and how we will be looking to capitalize on it, let's first go and see what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. Now, what we can see from an institutional perspective on gold is that with the last report, hedge funds have decreased quite massively their net positions. In fact, we went from having 278K net positions all the way down to having 268K net positions. So we basically had 8K longs getting closed and 1.2K shorts getting opened. So that is why we had the move to the downside that we wanted to see from the first place. Hedge funds started shorting gold, closing their long positions and opening shorts on gold. Therefore, you do expect the market to create a move to the downside. That is what happens most of the times. However, if we look at the long term, what we can see is that we increased net positions quite massively. We went from having 219K net positions all the way up to having 262K net positions as we are speaking, with still 341K longs and 72.9K shorts. So we can still expect the market to provide some more continuation to the upside now that the market has already provided the retracement. Plus, as we have already seen from a weekly perspective, we have this candle here, which if and only if it will close with this shape, we can expect the next candle to fill in the wick. Now, there is a quite important reason for which you expect the next candle to fill in the wick, which I didn't speak about in the previous video, in the previous lesson in which I basically had actually showed you guys this candle on chart. The reason for which you expect the next candle to fill in the wick is because if you have a candle like this, the wick that we see here from a weekly perspective is actually a retracement on the daily. So when you see a candle like this on the weekly, what you actually have on the daily is an impulse and a correction, in which the correction is exactly the wick that we see here from a weekly perspective. And that is why you expect a continuation to the upside, because generally speaking, after an impulse and a correction, you expect a continuation to the upside and the creation of a higher high. So going back down on the daily, what we see is exactly what we expect. We consider the market has created an impulse and a correction. And if you want information on a correction, as we have already seen at the beginning of the video, you have to take your Fibonacci from the low to the high of the impulse. And we can see that we have a quite strong 0.618 Fibonacci retracement, lining up exactly at this previous resistance, now turn support, creating a confluence of support area here from which we definitely do expect the market to provide a continuation to the upside. So the way in which we will be approaching this kind of situation with students is as usual being reactive and not predictive. What does it mean? Now, the monthly, weekly, and daily timeframes are the best timeframes for the direction of the market. And from a directional aspect, we have already seen that if on the weekly we will see that specific weekly close, we can definitely expect the market to provide the continuation to the upside. And obviously, it is quite good to combine our directional analysis with the COT data to gain even more insight on the directional aspect of the market. But the best time frame when it comes to confirmations and entries is the 4 hours. And at the moment on the 4 hours, what we can see is that everything is still bearish. And until everything will remain bearish like this, the market will easily continue to the downside and create continuation, so lower lows and lower highs. So at the moment, there is absolutely no sign for any kind of confirmation for any longing opportunities. So with students, we will definitely not be looking for any kind of longing opportunities yet. However, things might definitely change in the future, which is exactly what we will be waiting for with students. So if on the weekly time frame we will see the weekly close, as I have already explained, at that point, what we will be doing inside of this area with students is being reactive and not predictive. So we will be monitoring price action from a 4-hour perspective inside of this zone, waiting for the market to shift from a 4-hour bearish market as we have right now to a 4-hour bullish market. And only if we will see the market shift from a 4-hour bearish to a 4-hour bullish market, only at that point we will be adding gold to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for the move to the upside and completion of this impulse, correction, and impulse pattern to the upside. But until everything will remain like this on the weekly, because always remember that if this weekly candle will actually close red, then this full analysis and breakdown will change, and as traders we will simply have to adapt to the ever-changing market conditions, and I will try to keep you guys updated on all my platforms on what we are actually looking for on this commodity with students. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.